So there are pros and cons when deciding what to do with your money, but what I am trying to get you guys to see is there's such a variety of ways to define wealthy. For someone to be considered a wealthy retiree, could it be someone who owns 8 houses, or could it be someone who owns one small business? Is it someone that has $1 million, or is it someone who has $1.9 million in their investment funds? Or is it someone on Social Security living within their means? It is such an interesting question that I often fall back to the African proverb that says, wealth which enslaves the owner isn't wealth. Hi, it's Griggs of Obsidian Wisdom. Today was the question, when is a retiree considered wealthy? So this came across my desk and I find it to be an interesting question because you guys know how multifaceted I feel wealth is, right? Wealth is so much more than riches, but it does require a little bit of riches when it comes to affording my financial freedom. So when it comes to answering that question, what would be considered wealthy? Let's go ahead and take some numbers in consideration. First and foremost, the average retiree spends about $4,100 per month in retirement. So if you wanted my first thoughts on what it would take to be considered a wealthy retiree, I would say for you to have more money passively coming in than you have actively going out. That is normally a great place to start. Now we can get into what's considered financially independent versus wealthy and everything like that. And a lot of that has to come down to lifestyle, which I also think is very important. If you are eating ramen noodles every day to make that work, well, that's not really going to be considered rich or wealthy. Even though you do have your financial freedom, but you aren't really free in terms of flexibility and how you get to choose to spend your time each day. Money is still on the forefront of your mind, which I probably wouldn't necessarily consider wealthy. So when it comes to me considering someone wealthy for retirement, it's probably going to take a little more than just having the amount of money that you need. While that is a great start, it would then come down to how much of your time do you actually get to control? Do you get to go to the places that you want to go to? Do you still get to spend time with your family, traveling? Are relatively healthy. So if you want to go on a walk or travel or some adventure that you could do that and you can enjoy yourself while you're doing it, I would say that's great. How about relationships? Where are your relationships? Do you still have people that you talk to? Do you still have friends, family, acquaintances? Do you have communities that you're involved in? All of these things will be important for me when I'm talking about someone being wealthy. Someone can have all the money in the world and be broke. We know that because there are rich people who commit suicide every day. So we know that it takes a lot more than money to be considered wealthy. But at the same time, it's also fair to say that if we were diagnosed with something, I would like to have the resources to be able to take care of that. If there's only one doctor that could give me the treatment that I need, I want to be able to afford to fly to that doctor, get the treatment, however long it takes, that I could be able to check that off my list. I would love to be able to do the same thing for a family member, where if someone was about to die of something and they needed some special treatment, that I could afford to pay for it. All those things would go into my wealth equation. But again, when it comes to the pure numbers, you guys know that there's a few ways to be able to calculate this. So if we said it's about $4,100 a month and you say about 4,000 to be nice to me, that would be $48,000 a year. So then if you start calculating how much money I need to actually have in my investment funds, it really depends on what the return is. But a very quick and simple calculation is to use the 1% rule of retirement, which is a very fancy way of saying for every $1,000 that I want per month in retirement, I need to have somewhere between $250,000 and $270,000 sitting in my investment account. So if I want $4,000 a month, not considering Social Security yet, but if I want to have $4,000 a month, then that means I would need somewhere about $1 million. If I had about $1 million and I use the 4% rule, I know that that means I'm getting about $40,000 a year in retirement. So that puts me really close to the number that we're looking at. Now, if you're someone who has a pension, then we have to say, well, does my pension actually go up with inflation? Do I have a cost of living adjustment? Because while your pension may be $2,000 to $4,000 right now, if it's not going up with the cost of living, then that $2,000 to $4,000 isn't going to be worth the same in 20 years once you're deep into your retirement. Because as you guys know, I tell you guys all the time, the rule of 17 is a very fancy way of saying that every 17 to 20 years, your purchasing power cuts in half. It means that what I could spend $1,000 in purchase today, I would need $2,000 in 17 years. And we can see this playing out with the price of groceries when we go shopping. We can see it with houses and cars or even gasoline. We can see that the prices of things are going up. And as a result, our income needs to go up as well. So if you have a pension that's $2,000 to $4,000 today and it goes up with inflation, well, then you're probably good. You don't have to really think about anything else. But if your son has a pension that generates $2,000 to $4,000 today, but it's not going to go up, well, that means that you would need to have generated another $2,000 to $4,000 through your investments to be able to maintain the exact same lifestyle in 20 years. Otherwise, even though you're going to get that same amount of money each month for your pension, you actually are making half of what you used to make. And for many of us, that may be a gap that Social Security fills for us. Social Security is not meant to be our only retirement source, and I've done other videos and I'll put a link to it where I can go through how the more money you make, how the less you get from Social Security, and you can calculate your own Social Security returns. But Social Security average is probably going to replace about 40% of whatever your income is. Now, the good news is Social Security does have cost of living adjustments. It might not go up exactly one for one with inflation, but at least they're offsetting some of it so you don't have to come up with as much to be able to bridge that gap, which is aligned with the average Social Security check, which is about $1,800 a month currently. So the average person is going to get about $1,800, and the average person needs about $4,100. So you can see that we still have a gap to bridge. So if you're someone who doesn't have a pension, well, now you can see that we don't necessarily need the whole $1,000,000 to be able to cover all of our expenses because we're going to get close to half of it from Social Security, at least as long as Social Security exists. And that really means we only need to come up with $2,000 to $2,500 ourselves as far as the monthly income to go with our Social Security to maintain the $4,000 a month that the average person has in retirement. Well, if you look at that and go back to that $1,000 retirement rule I mentioned, well, now that means we only need somewhere between $500,000 to $700,000 to generate that $4,000 a month that we'd be looking for in retirement. Now, if you're someone who's focused on dividend investing, and I have some videos and I'll link to them where I go over some dividend investing strategies, you'll want to actually have somewhere around 1.4 to $1.9 million. And the reason is we're saying on average you get about a 2% return from dividends. Now, it is true that you can find some REITs that are closer to 9 to 10%. And there are some dividends that have higher yields, but on average, it's about 2%, which on average means you need close to $1.6 million with dividends. The thing about dividends is you want to be careful that you're not just chasing the dividend yield because there are companies out there that are going to promise you a very high yield, knowing that well, the higher yield I get, the less money I actually need to have in my investment account. And as a result, many of us are going to say, well, all right, well, if I need 1.6 million if I have a 2% yield, then I only need 800,000 if I have a 4% yield. And you'd be right, right? Because you don't need as much money. I'm getting a higher return from my dividend. As a result, there are companies out there who are overpromising and under-delivering, and so you just want to be mindful. Don't allow yourself to get caught in that dividend trap. Be a cautious investor when things sound too good to be true. Sometimes being considered a wealthy retiree doesn't have anything to do with the amount of money you have sitting in a bag somewhere. Sometimes it's the assets that you own that are generating a monthly income. There are people who don't necessarily have a bag of money sitting somewhere, but they have real estate and business ventures. To find a business that generates $2,000 a month to offset your Social Security, or to find a business that generates $4,000 a month overall, well, that probably won't require you $1,000,000, right? If we just take a step and think about it, I mean, how can someone sell a business generating $50,000 in income for the owner for $1,000,000, right? Of course they couldn't. So sometimes owning a business gives you that extra leverage where you're able to buy a business that's generating $4,000 a month for significantly less than it would take for you to invest in dividends or stocks in general. It has to be something that you normally have a general understanding of as far as the industry, or it could be something that maybe you're very passionate about. I know people who are like, I always wanted to open a daycare. So they open a daycare and they generate more than $4,000 a month. And so they don't have to worry about the expenses in retirement. They're having a great time doing it. There's also the ability to invest in real estate. If every real estate property that you purchase generated you $500 a month in cash flow income for you, that means you would only need 8 houses to generate $4,000 a month. Would you be able to do that with $1,000,000? Well, probably. It's probably relatively going to be the same, right? If you had $1,000,000 invested in the stock market or you had $1,000,000 invested in real estate, but one of the extra benefits that we find with real estate is you don't actually have to pay for the whole house in cash. You can put 20% down and buy the house and then receive the monthly income. Now, of course, you will have a mortgage note and you will have to pay it back at some point. But what I'm saying is you don't actually need the $1,000,000 to purchase the 8 houses out the gate. You could have the 20% down on the houses, so you could have $200,000. Purchase your 8 houses, and now you're generating that cash flow for yourself every single month. And that number is 1/5 of the amount that you needed for the general stock market, and it's 1/8 of the amount that you needed for dividend investing. And so that's a really great way to leverage your money as well. Now, you do have other things you have to figure out, like, am I going to manage these properties or I pay someone to manage these properties? And when stuff breaks, I got to fix it. So it's not necessarily one for one. So there are pros and cons when deciding what to do with your money. But what I am trying to get you guys to see is there's such a variety of ways to define wealthy. For someone to be considered a wealthy retiree, could it be someone who owns 8 houses or could it be someone who owns one small business? Is it someone that has $1,000,000 or is it someone who has $1.9 million in their investment funds? Or is it someone on Social Security living within their means? It is such an interesting question that I often fall back to the African proverb that says, wealth which enslaves the owner isn't wealth. And so for me, you having the freedom to choose how you spend your time, who you spend your time with, what you get to do with your time, to me, that is how we define wealth. I am not naive. I know that that requires a financial component for you to be able to do these things. You guys already know I've done that. I have had the best and worst year of my life. And the best part was I had the ability to choose what I did with my time. I wasn't working from sun up to sundown. I had the energy where I wasn't tired because I couldn't spend time with my kids as they were growing up, but I didn't have the money. And because I didn't have the money, that ultimately meant that I didn't have the flexibility to allocate my time how I'd want to. I had my time where I could choose what to do with it, but I didn't have the money to do what I wanted. And so, for you, when it comes to your retirement, we need to make sure that you have the freedom and the flexibility to be able to live your best life, to wake up when you're ready, to hang out and visit the people that you want to support the causes that you believe in. To me, all of these are a significant part of what we would consider wealthy. It's going to be your happiness and fulfillment, your health and wellness, and your financial freedom. When you have all three of those boxes checked off, how could you not be wealthy? And if you're someone who's planning on retiring in the next 5 years and wanting to help creating your own wealthy retirement system so that you'd be a little more happy and a little less worried about retirement, then go to obsidianwisdom.com to learn more. I'm always thankful for your time. I appreciate you giving it to me. I don't take it for granted. I know you could have been anywhere, but you chose to be here with me. Until next time, stay safe and enjoy life.